You're an investor in both of these names. I want to start with Alphabet. Again, those shares under a bit of pressure. The cloud, disappointing results. We heard Ruth Porat tell CNBC cloud optimization efforts really weighed on the quarter. What's your outlook on cloud? Are you concerned about Google not seeing the cloud growth that Microsoft saw?
Yeah, I mean, I think what you have to be worried about as an investor is that Microsoft gained share during the quarter. I think Sundar Pichai got caught flat-footed on the OpenAI, generative AI issue. And so that gave Satya Nadella an opportunity to step in. He is now expanding AI across the Office suite. So they have the first mover advantage. And I think that has put pressure on Google, as well as, the revenue growth was impressive, but it was driven primarily by ad revenue. And what multiple do you pay for that over the long term? That's our concern as an investor.
So I want to talk about the ad revenue for a minute. YouTube ads, it beat estimates, generally a read on consumer confidence across the economy, but I really want to focus on what it means for Alphabet. The company said it was fueled by the Sunday Ticket. We don't talk about Google as a streamer very often, but they really are. YouTube's probably might be the biggest streaming platform of them all, and they added live sports with football. Do you believe this growth in ads, is it sustainable even if we see an economic downturn? Is this something that you're looking at as an area of growth going forward?
I think it's an area of growth stability. Next year it is a political year, so that's always good for the ad generators, ad sellers. It's a holding for us. It's not a major holding. Microsoft is our largest holding across all of our large cap equity strategies. And I think investors should look for an opportunity if they don't own Google to get in. Ruth Porat is probably one of the better operators in corporate America. And so I think we need to give her some time. But it is a concern that's the driver and that cloud is slowing, at least for Google. That's my biggest concern.
All right,
and margins.
Got it. Let's turn our attention to Microsoft. You're also an investor in this name. Those shares obviously up this morning. We actually saw, when it comes to Microsoft, cloud revenue accelerate, possibly bouncing off of a bottom. What'd you take of the Azure results? Also important to note, from the report yesterday, we saw that Azure's OpenAI customers increased by 63%.
Yeah, 18,000 corporations using the product, and add Nancy Tengler to that. Probably didn't make the count. I think a couple of things. This is a company that's really firing on all cylinders. The Activision deal is going to bring them 13 games via Game Pass that, are $1 billion each. If you look at cloud growth, they are taking share. It is still in the high 20% range with Azure at 29%. That's pretty impressive growth in a company that big with revenues that large. And then you've got Nadella taking the first mover advantage, as I mentioned earlier, offering and expanding the AI offering across all of the Office suite. I think that is going to be very sticky. The $30 a month charge for OpenAI, ChatGPT, the usage of that is also something that is going to be a revenue generator. I mean, the naysayers were saying, Frank, that that AI was a flash in the pan. I think not. And I think this is a company that you need to have as a core holding in your portfolio, despite current valuations. They do pay a dividend. The yield is not that high. It's below 1%, but they're growing it pretty materially every year.
You mentioned the valuation, Microsoft trading at 32 times forward earnings. I want to get back to this AI CoPilot. Again, it launches on November 1st. Any concerns about a lack of clarity about how much revenue it could generate? You're saying it's definitely a revenue generator, but we didn't hear any numbers, no projections, nothing concrete.
I think that was wise of management. They don't know yet. I do think, though, if you look at the adoption of existing customers, you will see growth. I don't know that it's going to, it's a pretty, it's hard to put a dent in that overall revenue of the company. But I think what it will do is it will make the user stickier. And over time, you'll see that it contributes more and more. Just go back and think about the Apple Watch. When it first launched, people kind of rolled their eyes. And then it became a material contributor to Apple's revenue growth and sale and profit margin growth. So I'm not concerned about that. I think this is a company that knows exactly what they're doing, and they're not going to make promises they can't keep.
All right, Nancy, I want to turn our attention to Meta. Reports after the close today are Julia Boorstin has a preview of what to watch in those results.
Revenue growth will be the key number to watch when Meta reports after the bell. Analysts are projecting 21% revenue growth, which would be Meta's fastest pace in 2 years, going back to the third quarter of 2021 when Meta grew revenue at a 35% pace. Other key items to watch include what the company says about a strengthening ad market, how new AI tools are helping with targeting and measurement, growth in Reels, plus how the company plans to monetize WhatsApp and Messenger. We'll also see what kind of expense guidance Meta gives and what it's called is, quote, year of efficiency. Bernstein writing, quote, we see no better risk reward in the internet right now than Meta. Even if we see a larger expense guidance above $100 billion, we expect the company to comment that investment levels are tied to core performance. And on the heels of yesterday's lawsuit from 42 state attorneys general, we'll see if CEO Mark Zuckerberg gives any details on how this might financially impact the company. Frank, back over to you.
All right, important to note that Meta shares are actually under some pressure this morning, down almost 1%. So, Nancy, I know you're no longer a Meta investor. You sold your position. But in general, what are you looking at when it comes to Meta results? And are you concerned about that lawsuit?
Well, I think the lawsuit, I mean, it's noise, right? I think it has merit potentially, but I don't think it's going to put the company in jeopardy. These lawsuits are reminiscent to me of, old tobacco back in the day. And so, yeah, I think they have some work to do. They'll find a workaround. They'll find a solution. I think for me, the bigger issue is I'm just not crazy about the market, the model. And, we've seen from Google that revenue growth was decent in the ad space. I think Meta will show the same. But over the long term, the real question is going to be how are they going to monetize Insta? And that is the issue for me, I think. We've looked for an opportunity to get back in. We sold back in 2021 at surprisingly levels higher than current. We missed the low again. But again, I've always been a reluctant shareholder of Meta just due to the two-share status where the investors really have not much to say and management owns the direction of the firm kind of entirely. So I think there's better places to be despite what Bernstein said, and it's a firm I respect very much.
All right, shares up over 150% year to date. So you said you're looking for a possible position where you can get back in. Obviously, big rise in the shares this year. I want to hit on something else that Julia mentioned, the capex spending. Really elevated number right here. What do you think about their spending? It's mostly focused on AI and enabling their business for AI. Do you believe that's a wise investment? And does that completely blow up the narrative of the year of efficiency?
Yeah. Well, it's hard to tell, isn't it, Frank? I mean, this was Facebook not that long ago, and then it became Meta because the metaverse was going to drive the universe, and now they're pivoting to AI. I mean, you give credit to managements when they pivot for sure, but I think, Google's costs went up as well last quarter, despite laying off 7,800 employees. I think there's a lot of fat in these companies, and you can call it the year of efficiency, but if you're still spending at the robust levels we've seen from both of those companies, you do have to step back and take a pause. And I'll just say this, we took a look at Meta to get back in, and we decided not to. We made our bets in things like Spotify in the space, among other names. So I think at this valuation level, and I could be very wrong, so if you own the stock, don't act on my advice, but I think that you should probably just take a pause and see what management has to say, and then look at the future. Cutting costs is a strategy for the short term. It's not necessarily a strategy for the long term. Where's the growth going to come from? When is the spending going to ease? That's my concern.